Hi and welcome to Beer with the Broker. I am real estate broker Joe Peffer with Delicious Real Estate.
I'm Ebony Richardson, realtor with Delicious Real Estate.
And I'm real estate agent Miles Hartley with Delicious Real Estate.
Thanks for stopping by. We appreciate your views. We want to hear what it is that you want to see. What topics do you want to hear us talk about? Let us know in the comments, and we're happy to take any. We love to. Who do you want us to interview? What facts do you want to know? What are you unsure of? Whatever it is we can help you with on these shows, we want to do it. So let us know. In the meantime, Ebony, how are you?
I'm doing great.
Welcome to season 2.
Thank you. It's great to be back.
Fantastic.
Yeah. We're getting into the colder months here, but real estate is still hot. So, yeah, it's been a pretty good season.
It has been a good season. Another Realtor.com article talking about how Columbus is one of the hottest housing markets in the country.
Mm-hmm.
A lot of Ohio cities
Yeah.
actually in that list. Came out about a week ago. Miles, how are you?
Doing pretty well. Everything is going. Glad to be here once again. Round 2 of Beer with the Broker. So
Yeah, nice.
learning a whole bunch. It's part of the process, but I'm learning a whole bunch. So it's nice to be on board with Delicious.
Excellent. Well, we're happy to have both of you here today. So today we're going to talk a little bit about investors.
Mm-hmm.
Investors.
Yeah.
And by investors, I chiefly mean people who are going to be buying multifamily properties and holding those properties and renting them out to renters. That's just one way that you can be a real estate investor, right?
Mm-hmm.
Yes.
What's another way?
You can flip. Instead of holding and renting, you can buy.
What does flip mean?
You can buy properties that you need to renovate, and then you renovate them and then sell them pretty quickly for a higher return on your profit.
So buy low, sell high.
Exactly.
Not unlike the stock market,
Exactly.
but with real estate.
Yeah.
The quicker you rehab it and sell it, the quicker you move on to the next one.
Yes, absolutely.
Ideally.
Mm-hmm.
Sure. And besides multifamily, what else could you do?
I mean, you can invest in single family homes.
Single family
Yeah.
homes.
Single
Yeah.
family.
You could buy them and hold them, rent them out,
Mm-hmm.
and what good does that do you? What's happening while you're doing that?
Depreciation. I mean, there's a lot of depreciation that's happening right now. Prices are going up, so you can definitely get a house at a good price, put a little bit of work into it, and then, I mean, a couple of years down the road, I mean, if trends keep going like they are, you can definitely see a hike up in price, and
You improve the value of the area overall.
Who's paying the mortgage on that house?
well, it depends on how you do it, but I mean, it's hopefully you.
Well, ideally, it's the renters, right?
Yeah.
Yes.
Right. You've got renters in there, they're paying the mortgage is going down, appreciation driving the price of the house up over the years. So you've got equity,
Mm-hmm.
and the mortgage is going down.
That's actually one of the reasons why, being in real estate investing is a very quick way to acquire wealth, is because, you have someone that's paying your mortgage, you're building up that equity, you're able to, use that money that you would have been paying on a mortgage to either acquire more properties or, do more renovations, higher renovations to properties that you already have and create more wealth like that.
Yeah. And even if it's something as simple as like we were talking about earlier, the house hacking. I mean, even if you have just an extra room, I mean, with Airbnb on the rise, I mean, that's been a big thing. But I mean, even like outside of that platform, there's ways to really rent out different rooms to your house and really capitalize on that. I mean, who cares if you're sharing a space? If you've got the room, they're gonna help pay for your mortgage. It's not a bad idea at all.
Yeah.
What does house hacking mean?
Essentially, house hacking would be
Sounds very millennial.
right. It's basically having a mortgage that normally is in your name, but you're renting out, say, a room or extra space that basically allows you to have normally, hopefully, no mortgage payment on you, but it comes down to the person who's living with you that's really going to be paying your mortgage, which is nice. And like you said, I mean, it allows you to really diversify and use that wealth to really move on. So
Absolutely.
And I think young people especially should consider the idea of buying a duplex as their first property. I say duplex, it could also be a 3 or 4 unit property, but duplexes are much more prevalent. for all these same reasons, right?
Absolutely.
It's going to allow you to save money while you're living in your first house. And eventually you save enough money to either go buy your real house or your next duplex,
Yeah.
or 3-unit or 4-unit.
Scale it from
and
there.
just start slowly building a portfolio. And if someone else is paying most of the mortgage in that duplex, that's great, right? Because that allows you to save money at a time in your life where you're not making that much money.
Right.
And I think one of the most surprising things for me coming into real estate was, as far as looking at pricing for single family, I kind of understood that, but when you go into multifamily, like it's very doable. I mean, I'm young and I could very well see myself being able to get a quadplex, triplex, something of that size, and
It's more doable than people
Think.
think, if they think about it at all.
Yeah.
And the mortgage is very similar to a
Absolutely.
single family home. It's if you're gonna live in it, then it's pretty much the same.
Right.
You can still use an FHA loan, put as little as 3% down. So that's very little out of pocket to buy a house where someone else is gonna be paying most of your mortgage. You just have to have the income to buy the house, and you have to have the credit score to buy the house. And the sooner you start, the better off you are.
Yeah.
Most investors' biggest regrets, if you ask them, they'll say, "Wish I started sooner."
because the growth is exponential. I mean, it really is. Once you get started, it really, that portfolio grows. I mean, exponentially. It's crazy.
You know, you're not going to see the kind of appreciation you've seen over these last 5 years, probably for a long time. But in the greater Columbus area, I think you'll see very little chance of depreciation,
Yeah.
right?
Yeah.
And even if it does, someone else is paying the mortgage.
Right. Yeah.
So, you know, I think it's wise to have a long-term goal, right?
Yes, definitely.
You know, people like the idea of retiring earlier these days, and not being tied to any one particular thing. And investing in real estate is a great way to get there.
Right.
Absolutely.
Yeah.
So we'll be talking about investing a little bit more.
Investing.
So for now, we're going to talk about stouts,
Let's do it.
because this is the beer part of Beer with the Broker. We have
Tasty.
What we got?
two 22-ounce stouts from our friends at Wolf's Ridge, just a mile down the street. Good people, good beer, great restaurant.
Yeah, they have like cool board games and stuff that you can play while you're sitting at the table.
They
Which is
do.
great.
It's pretty upscale. You don't see a lot of board, except in the tap room.
Yeah, in the
Yeah,
tap room.
yeah. So one of these, and this for you guys, this should be a blind taste
Oh
test.
gosh, here we go.
You will probably be able to tell which one's which.
Okay.
Probably very quickly.
Okay.
All right, so one of these, this one, is the Night Method. It's an espresso milk stout. It's 6% alcohol. It's very tasty. And the other one is the Wolf Claw Imperial Stout. And that has lactose added to it, so if either of you are lactose intolerant, now's a good time to tell you.
I'm vegan.
I hadn't even considered it.
I mean, you can always, pass it
You
on.
can taste the beer.
So, it's also brewed with almonds, marshmallows, chocolate, and vanilla. So now you're really bummed, probably,
Yeah,
that you
super
can't.
bummed. It's okay.
But you can
I'll
sprinkle
smell
one,
it.
right?
I can smell it.
Or is that both?
If I were you,
Well, I
I
you
would
can
stick
tell me
with
which one
the
isn't.
shorter one if I were you.
Okay, got it.
Okay, I didn't hear any of that.
Right.
No. Okay. So.
But that's a 10% alcohol because it's an imperial stout. Imperial, when it comes to beer, mostly used to mean that it was brewed for the royal families of Europe. It was double the hops, double the malt, really high alcohol content. Typically, is what you'll see. It's been watered down over the years. meaning of that, I think,
Mm-hmm.
because American brewers, they call lots of things imperial.
Yeah.
But typically, it will convey a higher alcohol content and a much stronger taste to whatever it is that is imperial.
Yeah. And I still feel like royalty.
Yeah.
Ultimately, I'm a king, so we'll have to test it out.
All right.
We go
So
for it?
now, yeah, please.
Let's see.
Take
Okay,
it.
here we go.
Just
Small one, right?
throughout our discussion, we'll be tasting them and we'll talk about them later. I think they're both really good examples of what they are, both the milk stout and the imperial stout. So now it's time on the show where we like to do a little thing called the numbers.
It's good.
The numbers.
And Matt's got a bit. Did you see that? How he,
I don't know if I have.
him and Sam made a little.
Oh, yeah, I did see that. The last one?
Yeah.
Yeah.
So I'm sure
We'll have to get him to cut that in again.
All right, so remember the numbers refer to Franklin County single-family homes. Today we're talking about what happened last month.
Yeah.
Last month, in this case, is October 2019. What happened last month in Franklin County single-family home market? In October, we had, see now what's going on here. We had 1,672 homes on the market right now. 1,672. That's just a little bit more than we had the last time we came to you. In October, 1,266 homes sold, which was remarkably similar to the same month last year.
Okay.
So just over 1,200 homes sold last month. Out of those homes, they're on the market an average of 25 days, but median days on the market 10. So it's a hot market. 10 days is the median days on market for all the homes that sold in October. 1,200 something homes. Median time on market was 10 days.
Yeah.
So it's still a pretty hot market as we head into the Thanksgiving Day weekend. I mean, it's a few weeks later now, but still.
Yeah.
That's pretty crazy, right? Right now we have 1,600 plus homes in contract. A lot of those will be closing at the end of the month. Some of them will go into December, but I think a lot of those will probably end up closing at the end of the month, which to me is going to mean, I think, that hot October market is going to parlay into even more closings in November than we saw in October, which I think is not what you would guess, right?
Right, yeah.
And the closer we get to winter,
People get busy. Yeah, it's just
busy,
holidays, yeah.
but I think November's going to see more closings than October, which I think is interesting. 10 days, median days on market.
That's pretty quick. Like that's.
And the average sales price also increased, didn't it?
It
for
did.
October.
It did. It's up there. I don't really talk about the average sales price too much because it just doesn't really mean anything. I mean, it's interesting.
I just see it as an indicator of,
Oh, right.
you know,
Prices
the
are going up.
value of homes, and what does that tell you about different areas? Like,
I would say the prices of homes are at least 10% more than they were just 3 years ago.
and that's
We
something
talked about
investors
that
should
one
pay
more
attention
last
to, you know, because they're of course looking for the best possible deals, right, that they can get. So they want to kind of look at, you know, home prices are going up in this area, and I really want to get something in this area, so I need to act quickly.
I mean, I think a little bit later we'll see that. Let's talk about that though. Okay, so home prices are going up. Does that mean you should sit out if
No.
you're an investor and wait for some market drop, some correction? You sit around and wait for prices to become better than they are today?
No, not in my opinion.
Why not?
I feel like I feel like part of being an investor means being a little bit risk tolerant. And if you see that prices are continuing to go up, you don't want to wait and hope that, you know, they go down. Meanwhile, the properties that you like are getting in contract and possibly going, you know, for more than you might have gotten it for a few months prior to that. So I think acting quickly is of the utmost importance. Like, time is of the essence.
Do you agree with that?
I mean, somewhat. I guess the way I see it though is like there's with the rise in like prices here in Columbus, like this whole market this past year has just gone round and out. It's like at a certain point you're at the top of the roller coaster, you know. And of course there's always going to be room for to capitalize on any little bit of extra equity, but
Especially if you're holding long term.
yeah, I mean, but it just really comes down to really your investment strategy. I mean, if you are planning down, because I think if you are planning to flip, like you said, like it might not be a bad time if the prices continue kind of how they are. But I mean, long term, the question I keep asking as far as like the investment side of Columbus goes is like, where is going to be kind of the end of this kind of investor flow we've got coming in? Like I
think we're past it.
Yeah.
Yeah.
Like, I think we're on the downside of that bell curve.
Yeah.
I think the flipper parade
Yeah.
is coming into the finale there, the last few blocks.
Yeah.
But that said, there's a lot of homes out there that flippers own that they still are working on, and they're coming on the market every single day.
Yeah.
I think the buyers just are beginning to dry up for these homes. I think that the markets that these homes are in, the neighborhoods are tired of them.
But that's why if you wait, then you're going to miss out completely then, right? If they're drying up.
Yeah, there's always going to be buyers
Yeah.
for homes. There will always be buyers. And especially so inside 270,
Right.
which primarily where I work. And it's hard for me to talk about outside 270. But yes, Westerville, Gahanna, Dublin, Delaware, everywhere outside 270 homes are Canal Winchester, Oathport. Homes are being bought left and right. So yes, there will always be homes being bought, but it's not unlike the stock market, right? Do you try to time the market?
Right.
Yeah, you just get into it.
Yeah.
Just jump into the market and start laying a foundation.
Yeah.
I don't know where that all started, but in regard to multifamily, I'll tell you that in many other markets, in many other parts of the country, many people think that their markets they just don't make sense, right? Like everything is too expensive for them to buy and rent out because it's kind of upside down in that they can't rent it out for enough money to cover the mortgage. They're actually paying for part of that mortgage, even if it is rented out. So they're looking to other places. And one of the other places that they're often looking at is Ohio. I get at least a call a week probably from some coast or the other, California or New York, someone asking about the market here and wanting to talk about it. And oftentimes I find that their perception of what the market reality is doesn't match up with what's out there.
Yeah.
And mostly by that I mean you can't get something from nothing anywhere.
Right.
It doesn't matter what market it is. If you're looking for the golden goose, so is everybody else, right?
Exactly.
And it doesn't exist.
Well, and it's probably already found if there is one.
Right. Yeah. But the numbers make much more sense in Columbus than they do in Los Angeles or San Francisco or New York or Denver. So people do come to these markets, and they are buying things. And institutionally, large corporations that go to different cities across the country have been buying up single-family homes in Columbus for very much the same reasons. Some of those companies are held by large funds, and those companies make a lot of money on appreciation, and they're long term too. But Columbus is a good place to buy.
Absolutely.
We're the capital of Ohio. We have Ohio State, the largest university in the country, depending on what poll you're looking at, and we have a lot of business here.
Yeah.
And
Medical school.
And it's growing.
a lot of medical, a lot of insurance. It'd be nice if we had more manufacturing, but we don't because we're kind of too new,
Yeah.
which is why we don't have some of that old cool housing stock too, that are
Right.
like the old warehouse type stuff.
Mhm.
You'll see in Cincinnati or Cleveland.
Yeah.
Yeah.
Right. All right, so let's talk about the multifamily numbers.
Yeah. So first of all, I mean, when it comes to multifamily, what would you say multifamily is, Joe?
So multifamily is anything more than a single-family home. It's a duplex, meaning side by side in the same building, double, often called, up to however many apartments you can cram into a community and sell. You don't see too much of that, but there are $1 million portfolios out there consisting of doubles and single families, just single families, or just one apartment complex that you can purchase for $3-4 million with 60 units in it, 40 units in it. So multifamily does run the gamut from 2 units to really as many as you can.
What's up, yeah. Yeah. So as we were talking about before too, like when we look at the numbers for it, it can be kind of skewed sometimes because a lot of times, I mean, if you're comparing a duplex to say a bigger, larger apartment, community, then you're going to have some different numbers as far as that goes.
Right. So like the average sold price of a multifamily is kind of a throwaway.
It's irrelevant at that point.
But how popular is the multifamily market in Columbus?
Yeah, so
you can tell a lot of that by these numbers.
The numbers, right? Yeah. So year to date, we've actually had 1,877 multifamily listings, which that's quite a bit. Out of those 1,877, there has been 656 that have sold, with a total sold volume of $148 million. Which is that's a lot of money. That's a whole lot of money. I mean, there's definitely some room for growth. I mean, if there's that many actives, and only if you've, what is that? Like 33% of that is sold. There's definitely.
And that's about half of the single family market that has sold year to date. So much less number of sales, but
it seems that they're sitting, a little bit longer. Although we were looking at the numbers earlier, it's really not that. I mean, they're really not sitting on the market that much longer than single family. Average days on the market right now is like 35.8 days. It's
35 days. That's amazing to me that number is that, because it's not just really safe doubles like in Worthington and Dublin that we're talking about. I mean, we're like investments that were just easy to buy. But this is all over Franklin County. And it also includes, 4, 5, 6, 12 unit properties, which tend to sit in the market longer. And valuations these last couple of years on multifamily, I think, have been kind of outrageous, not unlike the single family market. But people keep buying.
Yeah. Do you think it's mainly those kind of out-of-state, coast investors that are picking up most of these properties, or do you think more the bigger groups?
I think locally there's a lot of people who have gotten into the game over the last 5 years. As we've seen this crazy market, they've looked around and said, I need to get a piece of this.
Yeah.
But there is a vast amount of competition, not unlike the single family market. For a lot of these properties. So 35 days, I think is pretty crazy.
Yeah, and it makes sense though. I mean, I was working with an investor about a week ago, and he was from California as well. And his big thing was, out there to get an investment property out there is going to cost him $300,000 or $400,000, $100,000 to get a property he's going to have to tear down. And so he came here, hoping that the entry level, it's going to be around right under $100,000. You can get a small multifamily, property, and you can kind of go from there. But I think that's where a lot of the hype has come from. Is there's all these podcasts saying that this is the promised land, and then so you have these investors that, they want entry into the business and they're getting started, and this is pretty fertile ground for that growth, I think, if it's done right.
And this guy who's your client, he's young, and he's just kind of getting going. And he realizes that the market he's in California is just not for him. So he's coming to Columbus looking for stuff, and is that what he has, is about $100,000 price point?
Yeah.
And so what sort of things did you guys look at and talk about? What can you get for $100,000 in Columbus?
So a couple different things. Going into it, I mean, so by day he's actually a petroleum engineer. So, you know, real estate is not his first language. So for me, it was just a lot of kind of the baby steps of kind of teaching him kind of the whole process and kind of what's going on behind the scenes. So we looked at probably about 12 to 13 different properties. Some were single family, but a lot of the ones he was interested in were going to be like duplex doubles. And those, I mean, they range in price, of course, in condition, but we looked at a couple that were around like 120,000 that, you know, you'd have to put a little bit of work in, but the areas are definitely up and coming enough that you could get some decent cash flow over time. So, you know, he didn't end up buying anything now, but I feel like we were able to get him in the door. He knows the areas a little bit better, and so he's not calling me randomly, you know, with crazy requests from across the coast.
He has a game plan.
He has a game plan, and I think really one of the most important things is really knowing the market. I mean, because I almost told him, like, I don't know if I want you to buy something the second you get here, you know, because I don't want you throwing your money away. There's so many of these new investors that really will get in over their heads because they think it's a cakewalk, and if you don't run the numbers and you don't really steward what you have, it can be a bad story too, you know.
Right,
So,
especially when you are across the country and you're depending on other people to take care of your property.
Yeah.
Both in the fixing up of it and the managing. And so Ebony, you work with a lot of local investors,
I
right?
do, yeah. So I work with a lot of, I guess you could call them mom and pop investors, like people who have just a few units, maybe have just gotten into the investment game. A lot of the areas that we look in are places like Milo Grogan, North Linden. There's a lot of, you know, inquiries into Franklinton, but I personally have experienced Franklinton kind of being dried up as far as like the real, you know, low price investment properties. But places that are coming up that are a little bit more unconventional, I guess I would say, is like the Marion Village, like South Columbus, getting into those areas are really starting to appeal to more investors, especially ones that are local that know they want something in proximity to downtown, but they don't necessarily want to pay, you know, the kinds of taxes that you might pay in Bexley or German Village.
right.
Yeah, Marion Village is probably tapped out years ago. But south on Marion
South,
Village.
going towards like, that's,
A lot of work there.
Yeah, it's, you know, it's just like single family, right?
Right.
Everyone wants to know where the hot up and coming areas are.
And
But
I'm also getting
there's
a
no
lot of,
secrets.
Yeah, there really is,
Exactly.
yeah.
I'm getting a lot of inquiries about tax abatements and things like that, Community Reinvestment Act, and you know, people are wanting to know how they can be more involved in getting those types of resources as well. And I do feel like those kinds of resources can be beneficial if they're used in the right way and by the right people. Like they are more so for people who are locally based, not necessarily like a giant corporation coming in to gentrify an area and using the fact that they get a tax abatement to do that. So.
Right, and as someone who's buying a house and flipping the house, that it's very likely that, depending on the neighborhood, the house may be eligible for 10-year tax abatement.
Right, exactly.
If you follow all the correct steps and fill out all the right paperwork. And for you, it's only a headache as a flipper. But it is an incentive for the buyer to buy the house.
Yeah.
And a lot of these houses are starting at very little taxes. And you're getting 15 years on some of these new build, big developments. And that tax abatement it saves you a lot of money.
Yeah, absolutely.
Over the course of those 10 or 15 years. Thousands, tens of thousands of dollars. And it allows you to buy a home that you never could have afforded otherwise. So, you know, anytime you can find someone that has a tax abatement,
Yeah.
you should definitely consider it
Yeah.
because of those reasons. Although with many of these large developments, there may be a tax abatement, but there's also usually an association, sort of, there's an HOA,
Right.
but there's also like a community charge that takes the place of those taxes. Maybe sometimes maybe half of what those taxes will end up being, that goes to pay the developer for putting in the roads and the swimming pool and building the buildings and the sewer system. It's not like you're not paying anything extra
Right.
always. So be aware. And your realtor should have a handle on what that means.
Yes.
Like right now in my head, I'm thinking Jeffrey Park is special.
Yeah.
15-year tax abatement, that's great. HOA fees really aren't bad. Usually for $500,000 and $600,000, really nice attached homes. But there is going to be a charge that will sort of take the place of those taxes
Yeah.
until those taxes come into play.
Yeah. Money's got to go somewhere.
Money's got to go somewhere.
Money's got to go somewhere.
Did you finish your numbers?
What was that? For this?
Did we start them?
Yeah,
We started
I think we did.
I know we got really excited about the days on market,
Yeah.
and then I cut you off.
Yeah. So, like I said, we were at the 35 days on the market. I think the only other thing I didn't mention was the sale to list price, which right now, like the average from January until today is at 96.3% of the list price, which is pretty significant too, considering these properties are going up. These investors from who knows where are buying them and not necessarily lowballing them to the point where it's hopefully it's not lowballing to the point where it's taking the community down. I really feel like the properties have appreciated where they're paying higher amounts, even more than a lot of these investment properties are worth. So yeah. But,
I found that surprising because I think it seems that it would be lower to me.
Yeah.
Because multifamily, there always just seems like there's so much more room to play with in the list price to sales price, which is exactly what we're talking about here. If it's listed at $500,000 and it sells for 96% of that, on average, that's pretty significant.
Yeah.
Although that 4% is what, $20,000. So it's not that much in the overall scheme of things, right? And I don't think you mentioned it earlier, but right now in Franklin County, that same list price to sales price ratio is 99%. And it's almost always 99%. And I think that's saying something too. Like all of the homes sold, and that's going to include your single family investment properties too. They average 99%. So anyone who thinks that you're going to come into this market and get a deal, which I would consider, well, anything less than that, really, right?
Yeah.
But I think most people think that they can come in and get things for like 90% of the list price, or less.
Yeah.
And it just doesn't happen.
Right.
I mean, it happens every once in a great while. In like the perfect storm sort of scenario, but no, it's very uncommon. So let's say that let's say you have a house, you own a house, you and your family live in that house, and you want to start buying either multifamily properties or single family properties as investments. We talked about how if you live in the house, it's very much straightforward with the lender, just like buying a house, more or less. But what if you already have a house and this is now an investment property? What do you know about how that changes things? What can we tell people?
Yeah, so when it comes to buying investment property, depending on the type of property, if it's just on the MLS, the normal market, it's not as much of a problem. But when you get into like auctions and like the HUD housing and whatnot, I mean, you'll have like a owner occupant time, and then you'll have like investor time where they can buy. So you kind of have a delayed time period where you get to take some of these good deals off the market. I'm not sure where I was going with that.
Right. I'm mostly talking about mortgages.
Yeah.
Right. So if you already have a house and you're going to go buy another house, the lender's going to consider it a second house.
Yeah.
For the most part, right?
Yeah.
And you can't put 3% down on an FHA loan on your second house.
Right.
You can do it on your first house. If you're not going to live in the house, you're going to have to put down 20-25%. So that's a big chunk of change, which is a barrier to entry, right? For a lot of people who like the idea of investing, but saving that kind of money up is difficult. And a lot of those people end up buying cheap properties in up and coming neighborhoods, and then they get discouraged because they're just so hard to fix up. There's so much deferred maintenance on them. They're putting so much money into them, but that's all they could have afforded to buy. So it does require some substantial savings to get that first one, right?